Well, good afternoon. This is
Yep.
Pat Cruzy with the Big Iron Livestock Market Wrap Up. It is Monday, the 24th of February, and I've got Daryl Holiday from Country Futures down in Frankfort, Kansas. And Daryl, another interesting week to say the least. We had one of the coldest weeks that I can remember, and it really slowed down sales of calves across the heart of cattle country here in Kansas, Nebraska, South Dakota. As I got the reports in this afternoon, it looks like we had maybe two barns in Kansas that ended up having sales, so trade was fairly light. They had some sales that they did postpone in Nebraska, but then there were a couple of the bigger barns that ended up having sales. It looks like, from what I can see, in Nebraska, South Dakota, uh, cash feeder calves on a 5 weight were up 12 to $15. Colorado was steady too, to up $10 at 380, 385. What's interesting is they were all in that same range on a 5 weight calf. In Kansas, like I said, not very much trade. I think it was like 1,700 head they reported.
Yeah.
Wasn't much trade at all, but again, everything was in that 380 to 385. Everything was pretty much steady to firmer again after a little low the week before. So, what are you hearing in the marketplace, Daryl?
Well, we kind of been fiddling around the futures market, kind of been wandering around. The feeder cattle futures have wanted to turn bearish mainly from some technical signals and some technical weakness. The problem is they were fighting against the cash index that's well premium to once again, that cash index is based on the 7 to 9 weight steer, but if the 5 weights are up that much, you're going to see strength in 7 to 9, and we've continued to see that. But we did not trade many of those big cattle last week at all on the feeder cattle side, and people just couldn't get them in or didn't want to sell them. We did have some video auctions that took place, and there was no sign as I went through last week and the weekend and then early today. There was no sign of any weakness that I could see in the cash feeder cattle market. That 7 to 9 weight steer was plenty of money, or the heifers, and of course the calf market continues to be very strong, and that has kind of woke the futures up about midday on Monday, and we rallied sharply after kind of a lackluster week last week, a little higher in the feeders, a little lower in the live cattle, cash drifting lower on the fed cattle market. That's because the beef market just has really struggled. But you can imagine, look at these temperatures we've dealt with from the Rockies really to New York, if you will. Or we like to say from Austin to Boston. We've
Yeah,
had just really, really tough situation. That means it's not very good for consumers either. But that's all waking up. The temperatures are changing, world's changing, the market looks ahead. It is a futures market, and even cash markets look out in front of them, and they see a better beef demand and even
man.
pork demand, or just better market movement. And that's why we saw some movement. I think we still might struggle with cash this week, but I think that 196 to 199, we were 199 last week. We might have to drift to 96 to 7, but I don't think it gets any worse than that. And maybe it doesn't even get to there. And then we start to see the seasonal and the live cattle is higher from here. And so a
Yeah.
lot of better things showing up. And that's really why I think that, if nothing else, we're bottom basing. And on the feeders, I think we're rallying sharply, mainly because of that big discount. You cannot trade feeder cattle this close to the end of the index, $10 to $11 underneath the index.
Right, right. Yeah. Yeah, the index has been strong, and are we seeing talking well, earlier about some of the technical trading going on? Are we seeing a group of the funds or some of these technical traders looking to exit the cattle market, or are they
Well,
they staying in
you
this
know,
thing?
I think they're generally staying, and they've got out at times. I mean, I think that's true. I mean, the big technical trade here in the last week or week and a half was in the March feeder cattle futures, which kind of had what we had the formation is a head and shoulders top, where you go up, make a new high, you go up, make a new high, and then you come back, and then the next high is no better than the first high. That's called a head and shoulders. The
Shoulders
problem
top.
with that is they are about 50% reliable, and it's what happens is a lot of people piled on that short side of that market. I don't think they were liquidating their longs as much as they were wanting to play the short side. They thought it would drop to 250 to 255. The argument is I'm a fundamentalist. I believe I use a lot of charts. Don't get me wrong, but fundamentals, you just can't. You can sit there. I heard people projecting March feeders down to 245 to 250. Going, how are you going to do that when the index is sitting here? We're trading cattle out in the country from that 8 weight steer bringing 272 to 280. I just don't see how you're
Yeah.
going to do that, and that's what ended up happening. And once that was blown out, you could talk about that formation all you want, but once the market today, March feeders went above 270.50, it blew that thing out. It ruined the formation, if you will, for them. And there were a
Right.
lot of buy stops on those people who had went short. So I think as much today was short covering. Once it blew above a certain level, they needed back out of that position.
Right. Okay. Okay. Very good. Uh, so we had a cattle on feed report last week, and some takeaways from that. And you sent me a chart here I'll bring up on heifers as a percentage of the number of cattle on feed as of January 1, and it just gets us again talking about what are we starting to retain some females, or are we not even close to thinking about retaining heifers? What is your
Well,
takeaway from the
yeah.
report, Daryl?
Yeah, let's start first with that. The placement number was up 1.7%. The interesting side of that is, so that was up, but last year was extremely low placement number because the January weather was so difficult last year. We may find the same thing when we looked at our February placements. When we look back at this February, this weather has tightened up those placements a lot.
Right.
So we were comparing it to a pretty low number. So even if you're up just let's call it 2%, that was still 110,000 head below the 5-year average of placements in January. So we are definitely into the lighter numbers. But as a rule, you'd have to say the cattle on feed report was right in along expectations. The expectations were to be up 2%. The on feed D down to around 99. So we're starting to see that on feed number drop, and the marketings were right in line with where we thought. So really
Yeah.
no big surprises there. What I did like the chart I sent you that we wanted to talk about was the fact that every quarter, when you get the quarterly reports, it's really kind of nice to look at the ones January 1. Last Friday, we got, it is a quarterly cattle on feed report, and it looks back at the January 1 number and tells us the number of heifers and the number of steers that were on feed January 1. And you can look at that heifer number as a percent of the on feed number. And I found that, I just find that fascinating that, we got up there to where the last couple of years we've been 39.6, 39.8, that area. Well, finally, we did drop down to 38.6 this January 1 of 25. That may sound like, well, that's a big drop, but it's really not when you look back to history. You look back in 2016 when we were trying to really build the herd, we were 32.2%. Well,
Yeah.
that's what it takes to show you're really getting retention. So we really haven't done much. In all reality, we're just kind of flattened out up here at the top, if you will, maybe holding the herd steady. That's what these numbers would indicate. There's always new numbers. And as you go through 25, we would anticipate that this percentage number would drop. But
Yeah.
it's, you got to get down there. It'll get your attention when that thing gets below 37
37.
and 38.6, below 37. You start to go, okay, we might be actually doing some building. But at 38.6, maybe I would say, once again, probably what we've done is just quit liquidating. We've now just kind of holding things
Holding
steady. But I do
things
think there's
together.
retainings that go. Yeah. So sometimes I just think it's just to keep things in perspective to see. Of course, it's worth noting that we got as high on 39. We got up to 39.6, and we've really never been that. When you go back to 2012, we were 38. Why did we go so much higher? I think that's another good question. And I think you and I have had this discussion before. I think that really is one factor, and that's the dairy beef number that we've seen
Oh,
this
yeah.
change. That's
Sure.
probably the heifers coming out of those dairy beef projects, which, as you and I talked last week, I think it was last week, we talked about the fact that that number is probably going to drop in the next 6 months. So it
Yes.
might be hard to make that number come down. I mean, it'll be a different type number, but it might come down much for the dairy beef as it does for anything.
Right. Right. Well, it's rightfully so. Um, uh, when you've got heifers bringing 1,900 to $2,100 the last 2 3 months, uh, why keep them when you can cash in and make that kind of change and pay off some debt?
Yeah.
Um,
Well, it's one of the phenomena that's also been going on in this whole move up that we've seen the last couple of years. I was visiting with a guy early this morning from Alabama who's in the cattle calf buying business and shipping them back to the plains.
yeah,
And he said that he's never seen in his life, and he's still so many 200 and 300 pound calves, both steered heifer, bull calves showing up at the auction. People are seeing these prices just going, just get them in there and get them sold. And we've been doing that in this industry for really the last 16 to 18 months, what we call rolling cattle forward. Now, the cattle don't
yeah,
disappear, but the cattle are trying to, it's like the owner says, get rid of them. And then the next guy, background's like, get rid of them before they go down. They're all thinking this can't last, which I
yeah,
understand. These are record high prices, but what happens is now you get to say situations like in February, right? In March, where you go, well, there ought to be a lot of feeder cattle available. Well, they might not be
they
available.
might
They've
not
actually
be.
moved into the system. So I think that's
Right.
another phenomenon that's been going on.
Here's another interesting thing that I spoke with a good friend of mine in the consulting business in northern Nebraska, and he works with a lot of grain farmers, cattle feeders, primarily in Nebraska, and and does a lot of reading from a lot of different trading firms that work with producers, and and this gentleman was pretty sour on the cattle market back in December and saying this thing's over. And he
Hmm.
was putting on positions. And there were a couple other major groups in consulting, some big groups in the industry that were saying the same thing, that it's over. Put your hedges on. And this was in December. And now those same groups have come back and are getting all bulled up and are going
Yeah.
totally opposite way. So they've gone from one extreme to the next now. And my good friend up there said it's crazy. We're getting a lot of people to a point where they're all getting really bowled up now.
Yeah. Yeah. It could be. That's a little
And
scary, I suppose.
that's
Yeah.
that's a little
That's
scary
right.
when the whole group goes one way, you might want to go the other. But
Yep.
yeah,
Yep.
from a fundamental
Well, the
perspective,
interesting side of that, yeah,
go ahead.
is that the market, the futures market has kept a discount, and that's what I found has always been very interesting. I would be way more worried about the blow off of these markets if the futures market gets out to a premium to whether either than the feeder cattle or the live cattle. We've not
Yeah,
had that. I mean, since
right.
we had that sell off in the fall of 2003, the futures market has wants nothing to do with being at a premium, whether you're talking about the cash live cattle market or the cash feeder cattle market. It doesn't want it, and that's when you get big premiums in the futures, that's when you better start saying, okay,
Okay.
we got too much bullish momentum, and we're going to get back. And I think that
Yeah.
to address your situation, I'm not being critical of anyone, but with your discussion, I think that discussion you had is very interesting. What a lot of people really thought was 24 was 24 and 25 was going to be 2015 all over again, where we fell apart into 15 into 16. And I just don't
Hmm.
think they've appreciated the demand for beef. We've had this discussion too long. The difference between 2014, 15, 16, and now is beef demand at the retail
Yeah.
level. That is what they missed. And they've come to recognize that. And the cash just performed. When you went to those highs in January, there were those people that really bearish looked at that and went, oh my goodness sakes, I'm wrong. And that's reality.
Yes. Right. Right. Yeah. Very good. Well, always an interesting conversation with Daryl Holiday here, and Daryl, we'll talk again next week. We'll see what the week brings, and I'm sure we'll have some fun things to discuss. So appreciate your time, and we'll see you again next Monday.
Thanks, Pat. Have a good
All
week.
right. Okay. Thank you.